Tesla just reported its worst quarter in years. Profits are down 71%, revenue missed big, and automotive sales are in decline. But somehow, the stock went up. There's a powerful insight buried in the numbers, and it could explain what smart investors see that others don't. Stick around to the end because I'll show you exactly what that hidden driver is. I'm Robert, and welcome back to The Alternative Investor. Quarter 1 2025 was a bloodbath on paper. Net income fell to $409 million, a massive 71% drop from the same time last year. Revenue landed at $19.3 billion, that's over $2 billion short of expectations. And automotive deliveries? Down 20% from Quarter 1 2024, with just 336,681 vehicles delivered. Quarter 1 2025 was a bloodbath on paper. Net income fell to $409 million, a massive 71% drop from the same time last year. Revenue landed at $19.3 billion, that's over $2 billion short of expectations. And automotive deliveries? Down 20% from Quarter 1 2024, with just 336,681 vehicles delivered. Tesla has been slashing prices to stay competitive, but margins are taking a hit. On the surface, this should have sent the stock crashing, but it didn't. Why? Let's look deeper. Because two key developments kept Tesla's stock alive. First, the energy division is becoming far more important than most investors realize. Tesla's energy storage and generation revenue exploded 67% year over year, hitting $2.73 billion. Most people still think Tesla is just a car company, but the energy business might become its most profitable segment in a few years. We'll come back to why that matters later. Second, Elon Musk made a major pivot. He's stepping back from political distractions and doubling down on Tesla. This announcement reassured investors who've been questioning his leadership focus. While some headlines are calling this a comeback, there are real risks under the surface. Global brand sentiment is eroding. Due to Musk's polarizing public presence, Tesla has seen vandalism, protests, and even a sales dip in European markets. It's not just bad press, it's affecting the bottom line. Also, new tariffs on Chinese battery imports are quietly threatening the same energy division that just had a breakout quarter. That part isn't being discussed enough, but it's crucial to the company's future. Tesla isn't the wild growth rocket it was in 2020, but it's not a slow value stock either. Instead, it's entering a new era, one that will be judged on execution, innovation, and scale. The real future of Tesla lies in its diversification, from energy to AI to autonomous tech. The bets are bold: full self-driving, Optimus robotics, and grid-scale energy solutions. If even a few of those bets hit, Tesla could justify a premium valuation for years, but it's also risky, because Wall Street is expecting results, not just vision. So let's answer the question we started with. Why did Tesla's stock go up despite a terrible quarter? Because smart money isn't looking at the car sales, they're looking at the shift. They're seeing a CEO realigning his focus, a surging energy business with high margin potential, a move toward diversified revenue streams. Institutions are quietly changing the way they value Tesla, no longer as just an automaker but as a platform company with exposure to energy, AI, autonomy, and infrastructure. That's the insight buried in the numbers, and it's what most retail investors are missing. The risks are real, but the upside is asymmetric if Tesla executes. Here's how I see it. This quarter was bad, no sugarcoating that, but Tesla is playing a long game most people still don't understand. The energy segment, AI potential, vertical integration, they're building a machine that doesn't just sell cars, but powers the future. If you only look at vehicle deliveries, you'll miss the bigger picture. But if you understand where Tesla is heading, and how institutions are already adjusting their lens, you'll see why the stock is holding strong. If you want more breakdowns like this, where we dig beneath the headlines, hit that like button, subscribe to The Alternative Investor, and drop a comment. Do you see Tesla as an energy platform, a car company, or something else entirely?